welcome to Town Hall 53. We missed last week because of the FinTech Talent America, which I hosted a session on that I really enjoyed. Just a little background on that session. It was discussing credit unions and fintechs and what the perfect union looks like. I actually just did a webinar on that. I've got another webinar coming up for the Correlation, one of our sponsors, Correlation CTO, CEO event coming up.
Yep.
I think that's on April 13th.
Hey.
Was when I just filmed one for that, talking about some similar things. You know, things seem to be picking up. We're seeing lots of activity, you know, throughout the industry. And so as a result of that, that means our competitors are picking up as well. So, but I really enjoyed that. I also have the CUNA Lending Council thing, I think, coming up. I'm not sure when that is, but Mike, I'm sure you're involved.
Oh, yeah.
And I've got another webinar coming, so that I'm sure we've got that in the slice here. But this is the Town Hall number 53. We're excited to have another Town Hall here. Let's move on to the next slide. Obviously, Mike and I are your hosts, and there's Bradley. Mike and I are your hosts, and again, you know, just a big plug for CU Broadcast. Mike, if you're not watching what Mike's putting out there, and I'm sure many of you are, you wouldn't be here, you're really missing out. It's you know, Mike has a lot of insight into the industry and gets great guests. So if you haven't checked out the actual CU Broadcast, I highly encourage it. It's regular watching for me. And you know, Mike, like I said, he's a great interviewer and has a lot of insight. That's why I asked him to join me on this. Our other sponsors, I just mentioned them, CUNA Councils, which Mike, you just got off the marketing one.
I did.
Did they do a virtual prom? You know how they do their, what do they call them? The CUNYs or something, or they give away their like trophies?
Oh yeah, they did. They had an awards section or session. Yeah.
Yeah, but normally that's like when they do it live, that's like the prom. I mean, they get dressed up and they go and they have an MC. Like, I don't know, I spoke at the event 2 or 3 times. Every time they have this big thing. So
yeah,
I didn't know if they were
that hoity-toity, but they did a good job. It was.
I was thinking they made you get in a tuxedo and do the virtual, you know, event.
Not this kid.
Not you guys, huh? Oh, and also some last place. I'm been picked up to speak virtually at the World Council.
Oh wow, good for you.
Where I'm going to talk about crypto. So.
Oh, cool.
Interesting stuff. But CUNA, huge supporters. We're big fans of CUNA. We're thankful for all they do.
Indeed.
And Correlation, it's great to have them as one of our sponsors. One of the only, but really the only credit union core system built in this century, I think, at this point.
That is true.
So, and obviously big. And we've got lots of things been happening. We have been doing just a ton of work for people, getting ready to pull together. Doing some implementations of for Alchemy. So basically working for people that they need to build things on their home banking and they don't have the programmers, or maybe their programmers are tied up in much more important stuff, but they need some small things done. And we've been knocking it out. So that's been fun as well. So we've
your voice stuff is very timely.
Yeah, voice has been really been picking up. 5 has been really important. People are really interested in the voice stuff right now. We're starting to see that come together as another digital outlet. Cool. So with that, let's get on to our guest now that he's here. Bradley, can you hear me?
I can hear you. Can you hear me?
I can hear you just fine. And thank you for joining us.
Absolutely. And I'm wearing a Hawaiian shirt today because of a couple reasons here. I think, you know, it's been 13 months since I've actually been traveling. So the last time I was actually traveling and on a plane, I was headed to Hawaii. And so I think that there's 2 things, right? So in Hawaii, everything's really laid back. And I think today, since we're talking about sort of working together and growing together, I think we need to be a little less laid back in the credit union side of the world. And I'm just really excited to be here again.
Yeah, and thank you for, you know, impromptu joining. And when I saw you, I was like, oh, I've been wanting to talk to him forever. So I'll give a little bit background about how I first met him. So I was at a Finovate, and I think it might have been one of the very first ones. I was out in San Francisco in that barn or whatever it is.
Yeah, that was a cool place.
And I decided that I was actually going to try Twitter. So I created an account, and there was a hashtag for it, and I just started tweeting, like all kinds of stuff. And I was tweeting about the people on there, and this guy kept responding with, I was actually responding to most of his tweets faster than he was me. He just kept responding with what I thought were very incredible insights, thoughtful insights into what was going on the stage. And it was the Leimer or B Leimer. I think he still used the same Twitter handle. And right then I thought, and that then I don't even think you were out sort of in the industry as any. I think you were working for a financial institution at that point, weren't you, Bradley?
I think the first couple of Finovates, I was probably at a community bank here in the Bay Area. Yeah.
Yeah. And so just, I thought your insights were brilliant. I remember one, we were talking about history and data, and it was kind of pre-data. And I said, you are what you buy. And you immediately jumped on that and just kind of went after it. Cause I've always long thought that we had the best data. So with that in mind, I want to do a little introduction on you, and then I want to talk about your book, and then I want to talk about the question that you asked last week. So let's start off with the introduction. So give us the the tour. Give us how you came to be the Bradley Leimer.
Yeah, and I'm going to correct you to say Leimer, but that's okay.
I've been saying Leimer for like 1,000 years.
You know what? A lot of people have, and that's
Yeah.
cool. I got Leimer the other day, and I thought that was really
cool. Leimer. I'm going with that.
Bradley Leimer. Yeah.
Bradley Leimer.
Leimer. Yeah. So really quick, my whole mantra is to make banking better. I've been in the industry for over 25 years. I've worked in credit unions. I worked in community banks. I worked at a global bank at Banco Santander. Born, raised, and living in the Bay Area here. So Silicon Valley, from when Silicon Valley started meaning something. And so I've been working with startups, sort of across the space for much of the last, 15 plus years. And I've never really, liked an existing technology so much that I wouldn't bring in a small challenger just to like kick the tires. And that's really where everything started. And that's why I ended up at Finovate. And now, I've gone from working inside financial institutions to working with them and working with several fintechs and working with large technology providers to sort of bring all of those people together in an ecosystem. So that's how we make banking better.
Well, and you partnered with Theodora for unconventional ventures, I think is what it is. And so you guys are really kind of singing from the same songbook. It's not surprising at all to me that I don't think you could have found a better partner than Theo. And looking at that, because not only have you been sort of an advocate for the technology and making banking better, but really making banking, what I noticed in my interactions with you was making banking better for the consumer or the member or whatever we're calling them this week. That was your whole focus, was their perspective. It was mostly what I saw there was, this purpose driven mode of how do I make this easier? How do I make this, more succinct, more, how do I, and that I think has been a big part of your success. So don't sell yourself short on that part of it. I've seen, where you've pushed on that. So you and Theo get together, you start this organization, and already you're in the bestseller list with your new book, Beyond Good, which I was going to bring up here. I bought it yesterday. I can't get it until it looks like sometime, let's see when it says it's coming in. Let's look at my orders here. Let's see, when does it say it's going to show up? Oh, April 14th through the 21st. Okay. But, oh, look, there, it even says purpose driven. So I had internalized some of your words already. I bought me a nice hardcover version because I wanted on my my bookcase. But talk to me about this book and tell me a little bit why everybody should read it and what it is that you're trying to impart to us here.
Yeah, no, I appreciate the call out to the book. The book actually just dropped yesterday in the United States. So a lot of people that pre-ordered got their copy yesterday, and Europe and other parts of the world had gotten it over the last couple of weeks. And we're really excited about this because really it's about leveraging business models across banking and fintech and in technology to really sort of make the systemic challenges that we have to serve people financially and make them more financially secure that much better. And so we leverage, more than 50 some odd voices from the industry. We talk about them in the context of both case studies and sort of what they're working on. And we use examples from more than 100 companies about business models that are doing well by doing good. And, the book kind of flows like this. We start off with basic problems that we're still as an industry not really, really good at. Taking care of understanding sort of the ways that food, water, and shelter, basic needs, are not being met. We think of things as balance sheet problems and product problems and service problems and growth problems, and step back and have those conversations with your members around that kitchen table, right? Or inside that business that they're trying to figure out during the past year, during the pandemic. And so we sort of call out the larger challenges in society, and we say, look, there are issues that systemically have been sort of oppressed against different groups, but those different groups are huge, profitable, great sort of segments to really focus on, and we sort of neglect them. And so we call out different sort of areas that credit unions already have in their memberships, but maybe don't really approach in a new way. So we talk about older adults and the longevity economy and the value of that, the fact that it's the fastest growing segment of our population and is globally, and they're growing in terms of the amount of spending that they're doing, the amount of credit they're using. I mean, who knew that people over 50 were the largest segment of people that were using student loans and paying off student loans?
Wow.
Then we get into small business owners. We get into the needs of women that people don't focus enough on. We get into LGBTQ, people of color, gig workers, and we use different case studies from different fintechs and different banks that are focused on these areas and really serving the needs of particular groups really, really well. So,
So
that's kind of the premise of the beginning of the book.
I love that you have case studies in it. So let me ask you a question. One of the things that I've been thinking a lot about, and I forget which book I read this in, but I read a book and it was all about adjacent business, adjacent business opportunities. And I feel like that's really a big opportunity in the credit union space. Is that something you kind of touch on? I'll give you my example is, if you're selling homes, then solar seems like an obvious adjacent business opportunity. And that's the really obvious example that everybody sees, but did you find anything else like that, especially in relation to food, water, and shelter? Because I love bringing it back to those basic needs.
Yeah, I mean, so we have a lot of examples in the book of the ways that startups are thinking about things differently. One of them that we feature is a company I've been working with for a lot of years called Stuvo, and they focus on the income side of the balance sheet from the consumer's perspective. And so they actually help gig workers be more efficient in the work that they're doing. But long term, what this is going to be is going to increase people's income, by giving them opportunities to work at different places, more flexible places, and not just be a driver for one of these large, sort of gig working economy type of jobs, to actually reskill and upskill so that they can increase that income side. The question I always have is, why aren't credit unions, why aren't banks focusing on actually helping people increase income? You don't have to be a small business owner for a bank to reach out and actually help you connect with more ways to make your business improve. You don't have to, just focus on getting people to save money by not having that cup of coffee. How about giving them the opportunity to actually grow their income? And so, tangentially, the business model of banking doesn't have to stop with products. Doesn't have to, so there's a whole service extension that we talk about in terms of how you can actually help improve people's systemic sort of wellness from a financial perspective.
So I have two interesting thoughts on that. The first one is this theory I have. So my theory is that my kids, I'm in that 50 plus, not paying off student loans, but I'm definitely in that 50. I found that out when I got my vaccine. Turns out that's why I got my vaccine. So once you pass 50, they're all about like, oh, you could die any minute. You should get vaxxed. So, but my theory is that this younger version, that we've created a generation or several generations that are not really going to go to the same place, do the same job every day type of thing. And that they're really kind of inspired to do multiple things. And they want to be, DJ Mouse Cat and also drive an Uber and, oh, by the way, work at the Mod Pizza down the way, or, the tattoo place or whatever. And that in its entirety brings their income together. But to your point, what they're missing, and by the way, we just posted a 20% discount on Bradley's book. I paid full price because I know you're poor and I want you to survive. I see some chess pieces missing there. I'm hoping you can get those.
It's the cat.
But the idea is that these folks, I think they're going to survive that way, but they're going to wake up down the road a little bit where some of the features of the classic employment, the 401ks, those sorts of things are going to pass them by. Now, you said Stuvo,
Stuvo, Stoovo.
Stoovo. So is that the kind of thing that Stuvo, I don't know them. So is that the kind of thing that Stuvo's involved in, is building the rest of that portfolio, the healthcare, the other things that you get from this traditional 9-to-5 corporate job that has been more prevalent for my generation and the previous one?
Yeah, I think, long term, there may be the ability for them through partnership to provide an entire sort of kitchen sink of, more transient or gig work type of benefits. But right now it's focused on getting you to understanding of kind of where your bills coming in and out, how you are doing financially. And then instead of saying, well, we'd offer you a loan for this, we actually want to figure out ways for you to earn your way to pay off something quicker, right?
Mm-hmm.
And understand that if you do this delivery versus that delivery, you're making 20% more. Or that if you actually go and do this online job, you can make 30% more. And so that's the type of thing that, we always think of product in traditional sense of loan and deposit and short-term, long-term. But we don't sort of sit outside the box and say, okay, if we're teaching people, the longer term implication of what they're doing in terms of financial perspective, we don't think outside in terms of the type of partnerships that we could have from our institution that we vet, that we actually, work together with other, institutions to say, yeah, this actually helps our members, right?
Yeah, and I'm gonna. It's funny because they used to exist, Brad, and the way they existed was really interesting. So I'm gonna throw this at Tom and maybe Kevin. So here, when I started off, I worked at Suncoast Schools, and we had, I mean, I didn't know this, but in 1995, we were a huge credit union. I had no idea. I just got a job there. I didn't know in the credit union world, we were like a large credit union. We had 53 branches. What I knew was that was 53 branches with, telephone lines that could go down that I had to go deal with, right? But what I did learn was I got to go to all these branches. And in every branch, you know what there was? There was a big bulletin board. And on that bulletin board was people selling their cars. And by the way, everyone knew it was magic. You go in there and put your car on one of those bulletin boards, it will be sold in 5 minutes. There were plumbers on the bulletin board. There were people doing teaching. So this bulletin board that was in every branch was this magic thing. And it's funny because it's actually doing, and we're losing it because we've walked away from that sort of thing. And we haven't digitally replaced this part of what turns out to be one of the other most essential pieces. You mentioned in your comment last week that collaboration was the big piece, but also community. So I'm going to throw that at Kevin and Tom. Tom O'Shea is the CEO of Aspire. I'll let him go first. And he closed all his branches. And I'm wondering, Tom, have you felt that? Have you seen that?
Well, yeah, John, and Bradley, good to talk to you. I remember back in the day when we had at my prior shop, we had those bulletin boards in our branches, and you could put anything on there. I mean, furniture, babysitting jobs, cars, lawn services, and it would all go. And it became sort of another reason to come by the office. The branch was to say, what's going on, and I got to sell my car. I'm looking to buy a car. And as we've gone digital, we've definitely lost that piece. It's, we're trying to rebuild the relationships through the financial services side. But, and I totally, agree with Bradley that we're missing the boat. We're completely missing the boat on where we should be. And we need to find a way to recreate that community, that sense of community. And credit unions are in a good spot to do that because we are oriented around particular affinity groups, whether it's an employer group or a literal town. I mean, we're in a perfect location to build on that community. Yet it's not something we've capitalized in the digital world.
Well, we just let it go. And the reason that was like magic, Bradley, was because people knew that that person was likely another member.
Mm-hmm.
And because they were another member, they felt better about doing business with that person.
It's a trust.
As opposed to just, grabbing an auto trader and trying to find the next one. So Kevin Sarber, was that your experience as well?
Yeah, if you go all the way back to the 1980s, I can remember us having a few branches that had libraries in them. And literally, these were older communities. And so, 10 o'clock in the morning, we had people that would come in and it was a community book and magazine. So they bring their own in, trade them, sit there, drink the coffee, And then at lunchtime, they would go do whatever they would do. And then they literally come back in the afternoon and sit down and do the same type of thing. And that we've tried to do that with, in some of the new branch styles by hooking up with Starbucks or whatever local eateries. And that, at least I haven't seen that work real well yet. But yeah, definitely a sense of community around the branches is something that has been there and has been replaced, I think, by apps like Nextdoor and things like that.
Yeah,
and
Bradley, I was going to ask you, respond to that.
Yeah, Nextdoor is really interesting, right? So you kind of you look at what Nextdoor and early days of eBay.
By the way, just for people who may not know, can you tell folks what Nextdoor is?
So Nextdoor is kind of like a community-based application that allows you to do everything from post things that are for sale, right? So cars or furniture or whatever, or things that are free. But also allows you to do things like, put up pictures of the neighborhood or complain about people blasting through stop signs or whatever it might be. Right. And it ends up being a very neighborhood focused Facebook is really kind of the way I look at it. But it's really interesting to like see something like that grow and to think about, large bank versus local credit union sort of approach to a large, sort of application like that as it grows. So how many credit unions are, going on Nextdoor and advocating for being part of your local credit union? How many? Absolutely.
Does Nextdoor have like advertising, like Facebook?
Well, yeah, they definitely have advertising, and everybody, could advertise and spend money. But I'm just talking about, are you sort of unleashing your credit union employees to talk about, hey, this is where I work, and if you're thinking about X or Y in terms of service or product, come and check us out. And there's really nothing to stop people from doing that.
Yeah, and so, but it's you spawned that idea because I remember that bulletin board so clearly, Bradley. I remember I would always check it because at the time I was a young father, and the only car we had was a 1980 Toyota van that my father-in-law gave me. I don't know if you remember those, but to get into the engine, it was under the front seat. So you had to open the front seat, and the windows wouldn't work, and it was Florida, so I'd have to. It was really hot. There was no air conditioning. But
so what's to stop people from putting that on their credit union websites? What's to stop, sort of building a little bit of that?
Nothing. And that's where, but I think your point is well taken. And that's where I was just trying to say, as we transform to digital, the answer isn't trying to follow these neobanks or the bigger banks who could never create a community like that, because you're one fish in a million in a sea of million. You're not going to trust another fellow Wells Fargo member any more than you would trust the guy on Auto Trader. But because Hillsborough County teachers, which was Suncoast Schools, and everybody who was in it at the time was theoretically a school person, whether they be a janitor or admin or whatever, there was a sense of community there. There was a sense of trust. So that brings me to this question that you asked last week, which I thought was just incredible. And it's the one we are all banging our heads against the wall, which was basically, you said, hey, Crayons, and man, I start every speech with this. I'll say, I usually tell people why I'm there. I'm here to speak to you because I was lucky enough to get a job at a credit union. I got opportunities I would never have gotten anywhere else. I'm pretty sure if I was at Wells Fargo, I'd still be cleaning the toilets there, or whatever they would have me doing. And also that, and learning that community and that culture, I deduced that Crayons were the best financial opportunity for anybody, that you're always going to get a better rate there. You're always going to get better service there. But yet, to your point, our GDP has grown very little. Even after the banks crashed in 2008, they have recovered and then some, and we gained very little ground. And just, I'm going to turn you loose. I can see you aching here, but let me give the last one, and I want you to speak to this. So Chime's number one claim to fame is we give you your paycheck before it posts, right? And I was just talking to a credit union yesterday, actually, a big one out in New York, that is a seg for municipal employees, basically, people that work out that way towards Tom. And they were actually lamenting because as a feature I actually did build into their own banking, which was to show the members that, hey, your paycheck's going to hit on Wednesday. Well, now they're calling going, why does it have to wait till Wednesday? I can see it in the pending. Give it to me now. And they're like, well, so, but yet other credit unions like Tom's credit union has been doing this forever. Why is Chime winning this battle? And you know, it's like two people selling the same fish, and for some reason, you know, they come from the same place, and ours is $50 cheaper, but some people keep going over and buying the $100 fish.
Yeah, credit union is the best kept secret. That's what we used to always talk about with the board. And it's like,
And you used to work for a credit union as well,
for
right?
7 years, yeah, I ran marketing and ran most of the decisions around, member
Can you say which
technology.
one?
It was a Kaiser Permanente credit union in California that is now part of Alliant out of Chicago.
Oh, okay.
Which is interesting because Alliant was, United Airlines credit union, which I was already a member of, and then they acquired the credit union that I was employed at.
And by very famously, no branches because mostly pilots, and those sorts of things. So, but go ahead.
So I was going to say that, credit union should not be the best kept secret, right? So there were 4 million more members at the end of 2020 than a year prior. That's great, right? So there's 124 million members. We know the story. But the challenge, I think, is that, a little under 2 trillion in assets, smaller than Chase, right? Chase hit 3 trillion.
And that's the entire credit union industry.
The entire credit union industry is $1.84 trillion. But assets were up 17%. And I'm looking at these numbers and I'm like, this is the stuff that I used to like take apart. And this was the conversation that I used to have with Radden Financial Group and other, sort of consultants that looked at this data. But the difference in the credit union sort of story is that even if as a smaller amount of assets, it's impactful, right? You don't need regulations and CRA to tell a credit union to actually do something in their community, right? You don't need to, or you don't always hear the stories that you hear in a lot of banks. Like I was at Santander, we had lots of issues with what we were doing with regulations and how we needed to fix things because we weren't doing the right things. You don't hear those stories, right?
How big is just for? And I like that you call it Santander because I always called it Santander. I'm sure they don't like that, but how big is how big is Santander?
So Banco Santander has about 160 million customers globally,
Right.
and they're a little bit under Wells Fargo, I think, in terms of asset size. So top 25 global bank in 20 different regions.
So like sending tulips to one of the tulip guys out in who maybe his tulip farm's not doing so well is not on Santander's radar.
Probably not, but they'll do things like leverage AI and be able to serve, I don't know, I think it's something like 6 million customers in their open bank version of a neobank that they have in Spain.
Right.
So, they'll be able to do things at scale that are both sort of personalization via AI and feel a little bit long-term like they might be more meaningful to you, as a consumer. The challenge is it's not. Right.
Yeah.
And especially this last year, it's been challenging to have personal relationships with people because they're not coming into the branch, or if they are, it's less, right, frequently. So when I look at the challenges of, the industry, assets are up, great, deposits are way up 20%. I mean, I'm looking at these numbers and I'm like, it's crazy. But loans are sort of anemic. Membership is kind of anemic, 3-4% each. Net income's down. When I think about credit unions, 83% of credit unions were profitable this past year, and that's down from 88%. That's troubling. The larger credit unions continue to grow. That's always been the case, right? So membership, asset, loan growth. Under 500 million, starting to struggle. Under 100 million, starting to struggle. Under 30 million, it's going to be tough. When I was in the industry, it was 6,000-7,000 credit unions. Now it's under 4,000.
Yeah, when I started, I think there was close to 25,000, and I was blown away by that number. And I actually met a lady with Kevin, and I think I don't know if she still has this credit union. We were at the California Credit Union League, and she came up and she took a big arm and she scooped all the stuff off our, all the tchotchke off our booth, and she left. And Kevin said, that lady runs her entire credit union off literally a paper ledger, right? And she must have been like 400 years old. She's probably still around at the time, but in this
got her little cart
lithographers or something like that. It was a really old credit union, but those guys don't stand a chance. And so you're preaching to the choir. Like the frustration you're feeling is like my everyday frustration. I yell it for them. I go in to talk to. I mentor a group of young men, and I meet with them every Friday, and they all have accounts at the local credit union now. But I tell them, tell their friends, and they're like, they all think it's the Kiwanis Club, that we meet down at the Golden Corral and say the Pledge of Allegiance and clean up, a section of the road that we own. That's the last. And by the way, that's where a lot of them see our marketing is like, this road cleaned by Aspire, this section of the New Jersey Turnpike kept clear of needles and other gross stuff by Aspire Credit Union. So how, you're a guy who's like been all the way up to these huge banks. What would you do if Tom says, hey, I'm going to give my credit union to Bradley, and how do you overcome this? What do we do?
Well, I would ask, how are you working together? How are you learning from each other? Those twice a year sessions where, I would sit with product people and technology folks, and we would actually learn from each other in terms of what campaigns were working. It's moving the needle a little bit, right? So membership has gone from, when I first started in the industry, probably 80 some odd to now 120, almost 130 million people. That's great. But we need more relationships. We need to be able to say the deposit give back, the rate give back, the things that you get by being a member, that actually is significant long term. So, what are we learning from banks that have, been investing in fintechs, been partnering with fintechs? And you talked about Chime and neobanks and others. You're getting squeezed from both sides, right? And I know I'm sort of preaching to the choir here, but it's like, big banks are going to continue to grow. They're going to continue, like Santander did, to invest in fintechs and deploy them. More than 60% of what Santander invested in when I was there, and part of bringing up their InnoVentures team, they've leveraged in some form, right? So this is lending, platforms that are geared toward small business loans. This is, new ways to onboard, new ways to provide customer service and member service in more efficient ways. And so, I look at partnering to be able to grow as key, and also learning from each other about those partnerships. What are credit unions doing to increase, this problem that they have with loan growth? One of the companies that I've worked with for probably 10 years is QNexus, which was acquired by CUNA Mutual last year. QNexus sits inside your digital banking application, mobile, online, and says to every single consumer coming in every single day, this is your sort of menu of opportunities for you to say yes to a loan offer. So you don't have a credit card. Here's your credit card. Here's your rate. Here's your balance that you could, or not balance, but a balance transfer. This is your limit. Here's a HELOC. Here's your rate. Here's a boat loan. Here's a whatever loan. And it could be 7 or 8 different offers, always present every single day, 365. In many cases, because of who they've integrated with from the core side, you click a button and you're starting the fulfillment process right there and then. You can actually get onboarded, fulfilled, and you could have that loan activation ready. And I'm like, well, why isn't this in every single credit union that has FIS, Jack Henry, CUNA Mutual, like all these different sort of applications built around it? Why isn't that something that differs from credit unions to banks? That every single day I provide you the transparency of what rate you're going to get, what your limit's going to be. And those offers change dynamically based on what offers the consumer takes and what, the condition of that consumer's credit is. And so those kind of things. So that, go ahead.
Well, I'm going to play a little, I want to throw in one of the situations. So Kevin and I used to work at a really large credit union together. I worked for Kevin. Now he works for me. So if you get, that's a good story. Eventually you can hire your boss and you can see how sad he looks. And one of the things we were challenged with was we're trying to explain to members why the city or whatever capital backed United card is not as good as our card for the rate. And so the story you're trying to tell that we figured out was, yeah, those points and those free bags, they don't add up to the 22% rate. But yet the members, we tried like hell to tell that story. And we could not, because for whatever reason, the bags and the points were more valuable than the money that they would save. And so I think that, I'm just throwing that at you because that's like, that I think that's part of the conundrum of the co-op sort of experience and explaining it in a way. And I don't think we've conquered that, but maybe you've got ideas.
Yeah. So like 4C and several other companies are, they put surveying on your website and surveying on your mobile apps, but they also, in a couple cases, had, put the ability for members to review products and services, right? And actually have that bulletin board where they could talk about,
really?
why, I would choose to pay $450 for a rewards card versus getting something that has a rate that's 6 points lower, where I could actually save more quickly for that vacation than I'm saving up
Right.
points for. But we don't do a really good job. I mean, I'm not just saying credit unions, but in general, banks and banking institutions, of actually explaining that to consumers, right? We might think that we're really good saying, well, don't get that reward card because this is what you're paying an extra. You're going to save 200 and some odd dollars, a year. Show people what that means over time, and demonstrate to them, through other types of services. Maybe it's, a discount travel club that you actually associate with membership. Maybe it's sort of a co-partnered with 20 credit unions in your area, a QSO that is geared toward travel benefits and these type of things. Think outside the box. Think about the companies that you could partner with too.
Have you ever taken a look at Fedor, FIDOR?
The sort of original BaaS infrastructure kind of player from Europe.
Yeah, so I went and visited them on site in Munich. And what struck me, and I'm just wondering what you think about this model. So the Fedor model was they first created a community, almost like a Reddit community of people, like Wall Street Bets kind of. But their model was that you didn't have to be a user or consumer of the banking institution in order to be part of the community. But what they would do is, let's say you were on that community and you gave good advice or helped another person on that community deal with, say, a loan or something, they would actually pay you as the loan. And what strikes me that's interesting is that, going back to what was the name of the company that does the community bulletin board? 4C, you said?
Yeah, 4C was one of them. There's another couple that do similar things, but I'll have to come up with those.
That'd be great. So, but coming back around to that idea that, okay, the bulletin board concept was, I want to buy off this bulletin board because I trust the other people on this bulletin board. So there's that trust factor, which is always at the core of everything. So the advice that you were getting in that community, it seems to me that, like, if the Crayons had, this is an ultimate collaborative thing, like credit union credit, spelled CREDDIT. We should work on that. We'll make C-Reddit is what we'll call it. But C-Reddit is just for financial, just for credit union members. They have to have a actual credit union to log in, and then let it ride with all the topics, anything anybody wants to talk about. But it's all about sort of that, that thought process of creating this community where people trust other people to give advice and get information that's somehow moderated, like Reddit is, and getting other people to moderate it. That's, probably somewhere along the lines of, because I just don't know that if I tell the story versus, United telling the story or whatever, I don't know how that comes from us, especially to the next generation. And I want to have that conversation in a minute, the demographics of credit unions. I know you've got some thoughts there, but if someone else, a peer, tells them that story, it says, word of mouth has always been the best advertising. Those kids that I mentor, they go to Ant because of me, and they look at me and go, hey, John's not living in a cardboard box that I can tell. So credit union must be good. I want to be like John, right? That's the whole Facebook model kind of approach. So in your mind, is there some opportunity, you think, for a credit union model like that?
Yeah, I mean, again, I think the sort of member experience that is shared is the one that is remembered. And I think that we sort of disleverage our advocacy that comes from members and how we impact their lives. I mean, I remember, we had launched a auto service that would find you a better deal on the car and deliver the car. And one of the families that we helped was on their way to, they were planning a family reunion. They were like ready to go. Car got knocked out of service. Whatever happened to it just would not get them there. So they contacted the credit union and said, we really need to use this service. This is what we recommended. They found them a van. They get to the family reunion. They're very happy. And they were like beside themselves about how much they were advocating for what we did for them in less than a day to get them this vehicle at a better price point because theirs had broken down. And it's like, you have to tell those stories. You have to give places to tell those stories. USAA was really, really good at leveraging that same application that I was telling you. And they allowed people to, rate just like they would in Amazon years before Amazon even existed, the ability for them to say, this is what I'm getting out of this particular service. And, how many credit unions are thinking about, all right, so we know we have people using Venmo. We know we have people using Chime and other places. let's talk about that. Let's ask our members about that. And let's talk about it in a public forum and actually, discuss that on website or tools that allow you, like Reddit, to have those conversations happen in a moderated way.
Yeah.
So there's a lot of, ways that we could improve, the landscape of the offerings beyond the financial impact that we can have. And it's just, it should not be a good secret. The benefit should not be a secret at all.
So I want to open up the questions for the last 15 minutes, but before I do, you're, as always, you've done all your homework. And so talk to me a little bit about the demographic of credit unions. One of the struggles we've always had is an aging membership, the transition of the money. COVID has actually killed off a lot of credit union members, unfortunately, because we had a lot of older members that were more in that SEG-based concept. So how do you see that evolving? Like, do you, right now, kind of going back, like that story is great to tell. And I think it resonates with 40s and 50s, but I'm not sure it resonates with 30s and 20s. And that's where the growth is really strong in organizations like Chime. Do you see products and service mix changing, or do we embrace what we have since there's a longevity issue? How do you play that?
Well, I mean, look at your average credit union website and think about, what that means to someone in their 20s and even their 30s coming in, right? And I remember the struggle, banks and credit unions to remain relevant and remain interesting. How many credit unions are doing anything on TikTok? How many credit unions, especially this last year, are saying, hey, go to town in terms of like promoting the institution on social channels. Let us know what you're finding out. Let us know, give them particular links, so that they could track and see what is being most clicked. Because it's one thing to say, hey, come and become a member, and then they land on your site or they land in your mobile app, and it's not a good experience. We work with a couple companies. One is Bond AI, which is allowing through their new application for you to onboard in seconds, right? Because it's connecting through a PFM module through Plaid, right? Mm. And it's allowing you to bring over a deposit relationship immediately. It's allowing you to issue a card immediately. It's opening up the account based on the core provider.
Right, and not waiting 3 days for an ACH or
you have to strike while the iron's hot.
Yeah.
It's kind of like, you're scrolling through whatever you're scrolling through in terms of content. It could be Facebook, could be Instagram, could be TikTok. And then there's a product. And you're like, oh, if it's easy, I'll totally get that right now. Well, what have they done? They've made it really, really easy. Well, how come we're not making it easy to join and transfer and get a better deal? How come we're not, making it easy for you to have a quick assessment based on your transaction history when you bring over that relationship to say, look, first thing I could do for you in that, quick look is that I could transfer over and actually consolidate one of those or two of those or three of those cards that you have into a loan that's at a better rate. I could save you $400 today right now.
Yeah, that's the part that, like I said, I think I had this idea way back when I tried to get it out there, where when you were done with the loan, I wanted to put a share button that said, tell your friends, and post a picture of them with their car on Facebook, because I did research, friends and family are the next round of growth. But I was way too far in front of my headlights. No, I think you're right on. Let's take some questions if you're okay with that. Also, don't forget, there's a 20% off for the book, which I can't wait to read. So did yours get translated into simplified or no? Mine was complex Chinese. Did you guys do a Chinese?
Not yet. Not yet.
I'll have to show you my Chinese version. You'll laugh.
Awesome.
Mine, it's a tennis book now. I'm not sure, but it's all tennis on the front of it. Hey, Mike, any thoughts? I mean, Mike, this is an area you spend a lot of time in with a lot of people you talk to.
Yeah, I mean, advocacy in this area is obviously huge. I mean, we just had the GAC where that was the main topic of advocating your credit union. And I was just trying to research on my site because CUNA has a website where they just launched it, where they have dozens and dozens of credit union members telling their story. And even Jim Nussel said in his keynote, he was talking about, hey, it's great that we tell our stories, but not with each other. That's great that we do that with each other, but we really need to tell our stories outside the industry to get other people interested. So, because if we're just talking to each other about how great we are, we're just preaching to the choir day in and day out. So that was his big deal. And I'm trying to find the website that CUNA has where they have all these kind of video testimonials of credit union members, and credit unions can post these on the site. And they mainly did it for your representatives, your legislators, to kind of tell them how great credit unions are. So, all the regulation talk and stuff like that. So
is that effective, Brad? You think, Bradley, in the sense of, is it cool enough to have the reach, or is it just another,
Yeah, you need to be in other channels, and it's like, the point of preaching to the choir has always been the problem, is that people in the industry, we have a pretty good sense of self, we have a pretty good sense of mission, but if we really had a sense of mission, the larger institutions that just continue to grow at 10-15% a clip would actually be doing more to corral those below them in terms of asset size, and improve their balance sheets, to take more relationship away from banks and to make the industry stronger. I don't want to be the one, nor do you, to be the one to turn the lights off of every institution but 10. 10 credit unions are never going to be a foil to banks in this country. That's the problem. You need more. You need this business model to continue, and you need to have larger institutions and advocacy groups and lobbying groups lobby for smaller institutions to grow and thrive.
So, speaking of smaller institutions to grow and thrive, Tom, you have any questions there in that aspect of it? Maybe give a little background to Bradley about your institution.
Sure. We're Aspire Federal Credit Union, Clark, New Jersey, and we're multi-occupational. Started with the FAA. We have a good number of employer groups within the credit union, good solid groups. We've been doing we call it pay yourself first, payday advance. Typically we'll get their payroll 2-3 days ahead of time, so we post it as soon as we receive it. Yeah, right. We don't get any credit. It's the best secret out there. It really is. But I was thinking about the social media aspect and things we need to do, and all of us have employees, whether it's 30 employees or 300 employees, and they're all typically younger, and they're all on TikTok and Instagram and Facebook and so on. Yet I'll almost guarantee we all have social media policies that say you will not go online and represent yourself as being part of the credit union. Think about it. We should advocate. We should train them and create that army of people that are out there in, they're in the neighborhood site, they're on the town hall site, they're on all the community sites, talking about us and creating TikTok events and whatnot.
I remember, I want to talk about that real quick. I like your point there. I remember we had we used to have local television crews sometimes come to the branches, and I remember the tellers at one of the Suncoast branches, they were famous for a little, every time we were doing donations for Children's Miracle Network. And every time that somebody would go ahead and do something, they would do all of them would do a little dance or something. And that got picked up by the local network, which was kind of the version of TikTok at the time. And it was a big deal. And they the internet wasn't really that big at that point, but everybody said, hey, tune in. There was a message that went out, hey, tune in tonight on, the local, news, because they're going to be there. So are you suggesting, Tom and Bradley, what do you think of this, that opening that up and saying, hey, all you guys, we know you're creative, be creative about the credit union and go for it. But then the worry is that they'll do something to get you canceled, I guess, in the term of cancel culture.
I remember, probably 10, 12 years ago, at least, doing social media policies within a bank, right? You have to just give people parameters and give them, what you could say, what you can. Not everybody understands that you can't quote rates, and you can't make offers, and you can't. It's kind of like the old disclaimer of I can't give you tax advice. Well, it's the same idea, right? Yeah. Give people the 2 or 3 or 20 bullets, whatever you want. Just don't overcomplicate it, right? And we got to do things. If we're going to open up the floodgates of different ways and cheaper ways to get the message out, you have to make onboarding easy. You have to differentiate, the offering, and whether that's through an understanding of, ways that you can help people improve their financial condition because you're refinancing something for them immediately upon them becoming a member, or you're providing them insights into the data that you're sort of pulling around their transactions, those type of things. There's an awful lot, of room here, because I'm looking at these kind of stats around, we've had mortgage growth in the industry the past year, 6%. That's great. But look at banks, right? Mortgages and real estate right now are just on fire. Your used autos up less than 5%. Your new autos under 4. People aren't buying cars. Credit cards are down 6%, right? As an industry this past year. There's no reason for that. You know, people aren't using rewards. They're overpaying for everything now because they ain't going anywhere.
Right.
Just one last thing I'll leave with in terms of an opportunity. What about small business loans? You know, 10 to 15% of every single membership base has a small business of some kind or a side business of some kind. The opportunity, excuse me, for serving the needs of businesses, even if you don't want to become a small business lender, you could work with a company like a Fundera or somebody else to basically transfer those balance sheets and get income out of that. There's plenty of income opportunities for credit unions to grow in terms of partnerships that are sort of out the box that improve memberships, you know, the membership lives and provide a service. So we just got to think differently and share those ideas.
Yep. Once
But
one
most-
thing works, then
I want to touch on that. John, most credit unions look at themselves as manufacturers, not distributors.
right.
So they look to say, how can we do this and build this on our own and then put it out there? Whereas we need to be more of a, you know, we need to have a core manufacturing base of main product, but we need to augment that and supplement that with best of breed and people that are specializing. And one of the things about the fintechs towards that case is they specialize. They have certain narrow areas that they focus on. They do it extremely, extremely well. We do a lot of things adequately. You know, that's why I think we're not really known for anything because we're known for everything. And if we narrowed our focus, we'd be better off. Often the focus is to serve the member. But what about the not yet a member? You know, where are you in serving those, the younger that are just coming into the company or moving into the neighborhood? You know, what works for me being north of 60 isn't going to work for my kids being in the 20s and 30s. And we need to make sure that we're meeting those needs so that the age comes down and the services and membership grows.
Yeah, I agree. So Bradley, and to your point, Tom, Bradley, you've rattled off like 10 fintechs that seem like they would be incredibly valuable. And credit unions right now are in that space. They're, you know, I have said that the game now is to out-partner the competition. And by partnering, I mean also collaborating, but to be better at partnering with the Funderas. So what, you know, in closing this, and we've got 5 minutes left here, but I want to give you a moment here. But man, I would sure love to see, you know, Bradley Leimer's thoughts on the top 10 fintechs that credit unions should call today. And maybe not so much the fintechs themselves, but the categories like Bond AI. You know, you make a good point there that one of the challenges we have in going out to TikTok, and you kind of touched on it just quickly, is most of us have closed charters, right? So they may see it, and by the way, it's a question I get a lot. Like I even got it from my own brother today. Can I join, you know, your credit union? Well, duh, it's friends and family, but you know, he doesn't know. He hasn't been in the credit union space forever and ever, and so how do you deal with sort of because here's
the field of membership limitations.
Yeah, and the yin and the yang of it, right? So the yin of it is that because the field of membership is specific, you can do niche-based things like you're talking about that are very valuable, and it's what's been the success. And then the yang of it is, maybe I've got them reversed, but if you expand to become FinMax Credit Union or whatever, you know, at the time they were Kaiser Permanente. I think there's someone else now, the credit union you were part of. Is it Connecta? I forget.
It's Alliant.
Alliant, yeah, they're Alliant. So, you know, they grow into this bigger space, but they lose that niche. And now they're trying to compete with the Wells Fargos where they just have to market to everyone. Is there some balance on that, or is there something you can think of given the special?
I think, you know, banks don't care, right? They'll take all.
That should be the slogan. Banks don't care.
Well, and we had bank transfer day, you know, back in the day. We had, you know, the financial crisis, and credit unions grew. You know, they had their moment for a few years there. I think most large credit unions have a way for people to join regardless of who they are, where they are, and it's not seg based and it's not community based. It's like, you know, give $5 to X and you're in. So I think more credit unions need to really challenge the field of membership. I mean, I expanded segs that we covered. I expanded communities that we were able to cover. And eventually I got the ability to serve every single Kaiser Permanente healthcare plan member, which was, you know, more than 4 million people. So get, more creative about what your field of membership means and what that means for your institution long term. And to the point that you made about the opportunity there should not be a business model that a credit union should not knock the door on in terms of partnership, in terms of revenue opportunity, in terms of benefit to the member. And I think collectively, we need more of those sort of centralized approaches, whether it's through a QSO, whether it's through an advocate like an AFQ or an NCOA or someone else to provide those insights. And I know, there are incubators and all sorts of different accelerators kind of geared toward the industry, but we need more of that. And we need people to be talking to each other more. So get on the horn and talk to your credit union next door.
Well, and honestly, that's what this town hall was made for. Literally, there's a pandemic. I'm not sure what everybody should do. I don't know. I called Mike and said, Mike, I'm going to do this town hall thing. And he said, I'm in. And here we are a year later. And that's the whole purpose of it. And there's been some incredible things like sharing around fraud, like what was happening. It suddenly was something, and other people went, they went and looked why they were on the call, why they were here. And I want more of that. That's what this is meant to be. Well, man, I can't thank you enough. It's a pleasure to finally actually talk to you. And I apologize for saying your name wrong for 1,000 years. But I've always known about you. I've always followed you on Twitter and everywhere else. We've kind of gone back and forth, and now I see why, just having met you in person, that your insight's very valuable. I hope you'll continue to advocate for the credit community as you have been. That's a big deal to all of us. We need all the help we can get. And you're welcome back anytime. We'd love to have you. And if you haven't got the book, go out, order it. There's a 20% off. He's got a book right there. And it looks like it's in English, so that's good. I will be reviewing it. I'm toying with the idea of starting a fintech book review, maybe a technology book review, sort of once a month, twice a month, because I read a lot. I try to read all of these books.
There's enough of them out there.
Yeah.
Well, and we actually on the podcast, we have a podcast called One Vision that we do every week, and we're about 100 episodes in, and we actually had a series where we did book interviews with authors. And so, there's always an opportunity to get authors on here, like myself and Theo, as you had a couple of weeks ago. So we just appreciate the time. And, you want to learn more as a credit union, you want to explore this a little bit, go to unconventionalventures.com, and that's what we do. Yeah, absolutely. And just looking at their social media, what they're doing, I mean, you can always tell how well somebody's sort of walking the talk by what they do out there, and you guys certainly are. And it's been a pleasure to meet Theo as well. I don't see any Star Wars stuff, but I'll let it go. All right, guys. Well, thanks again. Great episode. This will be posted out there. Bradley will get it to you. And again, just great discussion. Thanks, everyone.
Good stuff. Thank you.
Thank you.
For the day.
Brad, we'll get you a copy of this to post.
Yeah, appreciate it.
You'll have all the information you need. And hey, I've got a book, so I'd be happy to be on your podcast if you want.
Absolutely.
I don't know if did you ever get a chance to take a look at it? My book's kind of weird, but I'll send you a copy if you want one.
So tell me about what is the gist of it?
The gist of it is,
if I did see it.
It's called Breaking Digital Gridlock. It's not a need to go digital, because everybody was writing those. Mine was, this is how I think you do it, and here are the things you're going to run into. It's actually broken into technology, culture, personnel, data, the big piece, security, and I cover every topic and talk about, for example, why I think credit unions are failing at integrations, and I talk a lot about what I call second phase syndrome, and how we haven't kept up with some of the core competencies of internal technology. One of the things I frame in the book is, are you a technology company that delivers financial services, or are you a financial services company that delivers via technology? I polarize it on purpose. It's not so that either of them are wrong, though most of us would say technology company that delivers via financial services is probably the way to go. But it's when we live in the middle. It's when we think to ourselves, you know what? I bet Fiserv is going to let this bill pay product that competes with CheckFree, their product, integrate just as good as what they have right now, and then wonder why we made that switch. And I talk about all of that. It's a very, I actually call it credit union therapy to some extent. And certainly welcome to, I'll get you a copy if you want.
Yeah, absolutely.
I haven't
I don't miss those daily battles around the technology stack.
Yeah, that's what it is. And it goes into all those things that you talk about. But I also got very deeply into digital identity. I talk about the analytics, the path of AI, what I see there in terms of technology. But I actually use it a lot with strategy with credit unions and with boards. So they'll read it. come together and talk, because it's broken into that people, process, technology. I added culture and I added security, because culture is probably the biggest issue, and it's where I spend a lot of time in the book. So yeah,
Cool.
yeah. If you're interested, I'll send you and Theo a book.
Absolutely. So
Okay.
where are you based, John? What part of the country are you in?
I'm in Colorado Springs
Okay. Very
currently.
nice.
When I first met you, I was in Florida.
Okay.
So that's how I worked for Suncoast GTE. And then during that time I went to Westcom to start their QSO.
Yeah.
It was WRG. We started with 4, I left, they had 300. And that's when I started big, because like you, what I saw was everybody was buying my product, but then they were upset when they didn't get the results that I was getting. And I discovered pretty quickly that, yeah, it wasn't anything to do with the product. It's like picking up Eddie Van Halen. Not that we were Eddie Van Halen. This is not a great metaphor, but it's like picking up a great rock guitarist guitar and expecting to play like
Totally.
them. It doesn't work that way. And so as I realized that, and I realized that they needed help, and also I was just done and tired of digital platforms in terms of home banking. I moved into voice. We developed 5. I knew AI was the future. And so we started our group with basically 3 purposes. One was innovation. So we do innovation for a lot of Koreans who don't have time. And we do bring in fintechs. I'd like to get connected with you to have you talk to our innovation club if you're interested. These groups like CU Nexus, I'm actually going to email you and copy Cynthia. She's interested in that, in their stuff.
Yeah.
And I hadn't had time to do a lot of research. So I'm going to copy you and say, hey, I've heard good things, but man, Bradley's knows them well. And if you don't mind, I'll connect you with her.
Yeah.
She's the CIO of Vision Credit Union in Albany, and also one of our Innovation Club members. And then the other arm, so we have the Innovation Club. We sell a product called 5, which connects credit unions to Alexa and to Google Home and other platforms. So the goal was to build one thing so that the AI captures it all and gets smarter across the board, which is a mistake that a lot of credit unions are making. And also it collaborates with the credit unions. So if credit union A asks something and we don't understand it, when we improve it, it improves for everybody, not just for credit union A. And it happens instantaneously as we teach and train. And then the final piece is this. It's the podcast I just started because, I don't know, I'm going to yak anyway, so I might as well yak into a microphone. And this was started out of desperation. I wrote the book just because I felt like I had a book in me. And Brett said, write a book, I'll help you. And he connected me to Wiley, and they said, yeah, we'll print your book. And so, and one of the things I'm getting ready to do is to put out the audiobook. I got the rights now to do the audiobook. I'm trying to get that done in the next 2 or 3 months. So I thought it might be good to because I wrote about 2 years ago, to reinvigorate it, and maybe if you guys are interested in having me speak to that.
Yeah, absolutely. I mean, just talking about credit unions in general and talking about what you do to make them better kind of thing. I mean, that's a good conversation to have.
Yeah, and we try. I mean, this is an example of that, and it's why we get the same. We had 21 people today. Sometimes we have 40, but and people go, oh, the numbers are a little bit down. But then I go, I'll go to any town and try to get 21 people in a room once a week.
Well, and then you share it and how many people watch it, right?
Right. A lot of people watch it that way, and yeah, you're just not going to get that kind of reach. But the other thing is, it's very different. Is I'm going to get people on the call involved to ask you questions. I want to get them, and a lot of times we get tons of questions from the audience, and I know I'm going to force that interaction because I want to hear from them. They're sitting in that seat, but I do spend a lot of time with CEOs, and I speak at a lot of credit unions events. I MC them, I facilitate them, I do a ton of stuff with them. So, but I have been trying to get a little closer into banking. We did some work with USAA. So, do you know Neff Hudson?
Yeah, of course.
Neff's a good friend.
I need to touch base with him because I reached out and asked him a couple of things. And is he still doing the thing about their IP? Okay.
He has his IP tree. Have you been out there? Have you ever been to the site?
Several times, but I've not been since he started doing that. He was doing still emerging technology last time I was out there, probably 2-3 years ago.
And actually, they just posted, and they sent me a note for it. And I think it was him trying to be clever, but I'm not interested. They just posted for a VP of innovation here in Colorado Springs.
Really?
I think that would be working for Zach. I like Zach.
Zach's not there anymore, is he?
No, well, I think he is, isn't he? No? Well, maybe I'm behind. I haven't talked to him in a bit.
Okay.
Last I checked a year ago, Zach was still there.
I'm going to look now. I thought he left and went to some place like City or something.
Oh, he probably did then. Because, they brought in the lady from City.
So and she didn't last that long at all.
No, and we knew she wouldn't because I worked with her partner, Lisa, or probably Linda, that went to Bethpage Credit Union, and she was like, "Nope, my team was propping her up. That's going to fall apart soon." And sure enough, and then I think Linda went back to Citi. But USA is about the only bank that we've ever really worked with outside of the credit union space. So we're always happy to try to find a little more. Yeah, I'd like to help. I think community banks do good too.
Yeah.
And I don't think credit unions see them. That's another issue. Is credit unions need not to see community banks as the enemy.
Agreed.
Because the only way they're going to beat them is together. Whether they, and the more they fight amongst each other, it just makes people like Wells Fargo and the others happy. So.
Yeah. Well, let's yeah. So hold on a second. I just found him. He is at Charles Schwab.
Schwab. Okay. Yeah. Well, I don't know who.
Still based in Austin.
But Neff sent me the note, and I was just
Yeah.
like, I don't know. I don't know if I'm not going. I'm too old. This is my final resting place. Is the business I've built here, and I'm also doing a ton in robotics, which is a whole nother thing. So,
Cool.
But yeah, I think that I really would like to work with you guys a little closer, and I thought maybe you and Theo could talk to our innovation club. I think that'd be a good place because it's 12, actually 14 now of the largest credit unions in the nation, but they're vetted. So we don't take people who wake up and say no. We don't want an organization where your CEO is 85 and retired in place and thinks hanging on to 17% of the cap rate is a smart idea.
Yeah.
And so the credit unions we have are younger CEOs, up and coming CEOs, but they're also people who are willing to implement, willing to do things. So for example, we share RPA, robotic process automation stuff. We're currently doing a prototype on augmented reality we actually got the CEO of U6 to give us a bunch of glasses.
Okay.
We just try to do experimentation just to see what we get, what it looks like, how it works. Just a toy. And so that we last month we did, or we're going to do it again this month, our entire meeting I bought everybody Oculus Quest 2s, and we used spatial. So instead of meeting on Zoom, we actually met in a virtual environment just to try it, just to see.
You think they're ever going to make Oculus work well with a Mac?
No, but it'll work well with your iPhone.
That's crazy.
Here's the problem with the Mac is the Mac. The biggest issue that they have with the Mac is that the Mac is just never looks like ever gonna really embrace a really good graphics card. That's why I walked away from the whole Mac environment, because as it started to slide downhill, I had all these needs of being able to run NVIDIA stuff for the TensorFlow, for the AI stuff we were doing, and Macs just weren't getting it. And then when I was out at the World Council, a friend of mine, Edgar, so in Singapore, everybody has to do their own military stuff. They have to be part of the military. And so Edgar was on his Marine team, had the CEO of Razer. And so we went and hung out a bit, and he goes, Max, he goes, I'll give you a box. And he gave me a box. And sure enough, man, that's the best Windows 10 thing I've had. And now I've just been buying them since because they.
Yeah. I mean, for gaming, for AR and VR, for all this stuff. And it's I switched over a laptop, at least for travel, to have something lighter and to have something
like an Air or something
that worked with my phone and all that other fun stuff. And I really do miss I used to have several gaming boxes.
Oh, yeah.
And my last one was Alienware before they moved over. And it wasn't. Now my son, because I started talking about it, my oldest says, hey, I want to build a gaming machine.
Yep.
And I'm just like, all right, let's go. So I guess I'll have something to run an Oculus on pretty soon.
I switched out to this.
Yeah.
So this is like my iPad. This is a Surface X.
Yeah.
And I take all my notes on it, and it's basically a full Windows 10. The only problem I have with this is the processor is a little new, so it's taken a while for all the apps to get there. I use a Samsung phone, and it connects just fine. And one of my favorite things, one of my biggest problems with switching back to the iPhone was that, and to your point, I was a big user of iMessage.
Yeah.
So Samsung, you can just go to messages.google.com, and you get all your messages on as long as it's on the same network that you're on, you can sit and type your text messages and follow through with that.
Okay. So
I've been doing that. But from a gaming perspective, and here for fun, I'll show you something real quick. So I've been working on this robotic avatar, which would be interesting for you guys to think about. So this idea that, imagine if you could have a robot that you could, and if I'm keeping you, let me know. I don't want to keep you. But imagine you could have a robot that you could inhabit from far away. That could basically a humanoid robot, not like some robot that only does one thing, right?
Okay.
So we built the first basic humanoid robot, and then and just to show you kind of, let me find the message here. So here's a quick take on what that might look like. So, or what it actually looks like. This is the real deal. So we built it over the last year. It's basically controlled. You'll see it in the opening here. So that's Biomni, 100% controlled by a human, right? So it's not autonomous. Everybody's going after autonomous. And I said, that's never going to work. Open. So there's the user, just to stop that. You can see using just standard VR, those are valve indexes, and he's in a whole nother building. So but he can see everything that's going on. It's like he's there.
Yeah.
Right. So, and as you can see, those hands, do you know who Dean Kamen is?
Mm-mm.
He invented the Segway.
Okay.
So those are parts of his stuff that we incorporated into this. But the Unity piece, I actually have an article coming out in Wired here shortly.
Okay.
So maybe I'll come back and talk about that. But so this is him actually building, making a,
an adult
what they
beverage.
call a Canadian Caesar. I don't know if you know what a Caesar is, but basically it's like a Bloody Mary. And you can see like how fine, like for example, shaking the Tabasco in and the Worcester. I'm just trying to go through it fast because I know you get it. But imagine how this changes the world. So now you can, let's say you're a framer and you want to go and frame. So to your point about this idea, this is somebody we had at our AXFI conference who I met through a friend. A friend of mine is author Kevin J. Anderson. And so Kevin introduced me to his group of people, and Harry was one of them, Dr. Harry Clore. And I just was intrigued because he was the first person saying, look, AI isn't going to rule the world. There is no such thing as general AI. And oh, by the way, one of my partners is Ray Kurzweil. So he introduced me to Ray, and I agreed with that. I was already on board with that. I was like, you'll have AI, like a financial AI makes sense. And I've been working on this idea of a cascading AI. So the AI recognizes, say that, this is a cup. And then it goes, let me go to the cup classifier. Okay, it's a plastic cup. I can recognize it has a logo on it. It's a Coke cup, and it's made by this person, and it's this big. And if it's not full, it's this weight. And so you're cascading down the classifier, right? But you're not going to get something that's smart enough. Like if I teach something to wash this cup and you give it a bowl, it's not going to work. It's not going to be smart enough to go, well, it's just a bowl. I'll do the same thing. Yeah. So what we've been working on is this idea where as that person runs that robot, I'm collecting all that data. So it's an evolutionary learning process, right? That continues to go. So, okay, the task is pouring this Tabasco sauce. Okay, well, I have all that data. Now a couple hundred other people do it, and slowly but surely, it's called reinforcement learning. It's a whole new process. So that's where I've been putting a lot of my effort into, because I feel a little, like you, I kind of want to change the world. I'd like my legacy to be something more than I made the talking piece of plastic tell you your balance.
Yeah.
And I see this as an opportunity to do that. Plus, my dad was an NASA engineer. I just never got to do my robotics stuff. So, but
you should write about this next then.
Oh, I'm going to. I have actually I've got two. One is I think I'm going to do breaking cultural gridlock because it needs to be said. Yeah. I think Chris does a good job of talking about it, but no one's really writing about it at that level. That you really got to rethink your organization, and who's this whole, like you said, the whole, a great example of a topic would be the social media thing and not letting people do it. I think I want to write about the community boards that we just talked about, those going away. Wiley's been after me for another book. I just haven't had it in me. Turns out it was really hard to write a book, particularly for someone who's really ADD like me.
It's easier to write it with another person, that's for sure.
What's that?
It's easier sometimes to write it with another person, but then
and
you run into the, are you on the same page, literally?
Yeah, and I am. I mean, Brett did my forward, which was wonderful, but I was definitely, lost in space when, I wrote it. I get lots of comments on it. People like it, but I think I got to follow up on that. But then I am going to do a follow up on how robotics can change the world. Particularly, it solves like 12 out of 14 of the World Economic Forum, problems for society as a whole. It's a big deal, and I'd love to. And that's something we could bring to your podcast. I could bring Harry. I could also bring Tony Robbins as an investor. So I talked to a lot of weird people lately, like Seth Green. I spent some time with Thomas Middleditch, who's in some hot water right now, but he's one of the people that invested. So we got all these people that are famous that put money in, and then we have big investors that like Boeing and whatnot, that are coming out of the woodwork for the manufacturing. Because now that we've accomplished the task of you being able to see, you hear spatially, you can feel. So like when you grab this cup, it'll stop your hand at that point.
Right.
And so, imagine like a building, like take somewhere where you're building a building, right? Right now, you can really effectively run 8 to 9 hours, right? And then all production stops. Well, imagine that there's like a call center in some village in South Africa that has all the glasses and everything. You teach the people to frame. They come in, they can walk to it. They can work on this facility halfway around the world, framing in all of the place, and they can do it in those off hours, right? So now this building effectively gets built 3x faster, which means it supports the community. The jobs get out there 3x faster. So this is game-changing type stuff, the idea of the avatar that, is Harry developed. Harry's good friends with Peter Diamandis and Anusha. Like one of our MOUs is with Camera Asterium, which is bringing forward Axiom and intuitive machines. That's the next International Space Station and the first moon base. And so, did you see Space Force? Did you watch that on Netflix?
No,
So
I remember seeing it though.
Big joke where they had to train all these plumbers and electricians to be astronauts and send them up into space. And at the end, they couldn't find a couple, so they went to Craigslist and like, here's Jim, this lady and Bob. He was a good plumber. He had really good ratings on Craigslist. We're going to send him up to space. But the robot can have an electrician, it can be a plumber, it can be a doctor, it can be all of these things because it has working hands and fingers. So
that's cool.
It's pretty cool stuff. I've enjoyed. I kind of pivoted into that. I still do all the fintech stuff, but I see, like, think about people. You were talking about the gig work. Now imagine right now that's great for people who do digital stuff, but a lot of people don't do digital stuff. So now we can take someone who is by trade a plumber or an electrician or something and give them work around the world.
Yeah.
It's not distance. It's not geographically locked in.
Cool.
Yeah.
Well, I look forward to that book too down the road, but appreciate.
There's one out there already called Avatar Dreams if you want to read it.
Okay.
You could grab that one. I didn't write it, but it's written by Kevin and Harry and a lot of his friends, and all of them just did a science fiction story about how avatars might work, and also what could go wrong, which is fun. That's how Kevin writes. It's and then something went wrong. That's always his premise. All right, man.
All right, John. Good to talk to you. Thanks again.
At least I'll reach out about getting you those books, and whenever you're ready for the podcast, I should have the audio book done and by the end of next month. So
cool.
And then I would love to promote the audio book a little bit. I think people would like that.
Cool. All right. Well, we'll talk soon. Take care. Thanks, John. Bye.